Hello, YouTube friends, and welcome back to another episode of The Rational Investor. I hope you guys are doing well. Today is Sunday, January 7th. Trying to enjoy my weekend, but it's freezing, which is kind of why I was in the office the other day. But like you guys, I like being outside too, so I wanted to get back out here. Anyway, stick around. I'm going to go over the portfolio that I did for YouTube, the one that I invested in 20 different stocks. We'll go through it and we'll see how it did for the first week of the year. So, good morning. I hope you guys are all doing well. I probably said that already. Those of you who don't know me, my name is Adam Kahn. This is The Rational Investor. Before I forget, if you could do me a favor and hit that subscribe button, maybe hit the like button. It really goes a long way. It helps YouTube's algorithm. It helps other people find me if you like the content. And I'm really enjoying doing this. I actually saw a video of Graham Stephan, who I like a lot, who made a comment about if you guys are watching videos by guys who are over 50 years old, me, that don't have any editing skills, me, that they're probably giving some good advice. And I say the same thing. When I watch on YouTube and watch other people, I do find that when I see these older guys who don't know what they're doing in terms of editing, the information they provide is pretty good. So hopefully you guys find my information good as well. I also find a lot of times, like, we're not the ones telling you to margin your whole account on these crazy high dividend stuff. Like, we tend to be pretty conservative in our advice. I'm also going to put a link in the description for opening an account in SoFi. And before I forget, I'm going to go into the bulk of what you guys want to hear in the beginning of the video. So if you guys don't want to hear about all the stocks and how each individual one did, instead of saying if you wait until the end, you'll see this, I'm going to get into that bulk right in the beginning so you don't have to sit around if you don't want to. And then I'll go over each individual stock as well. But I'm going to put a link in the description on opening an account at SoFi. Like I said in another video, don't feel obligated to use the link. I'm really not pushing it. What I would like to see, though, is people open up accounts in general and not be scared of investing, which is why I did this portfolio, to show that the ups and downs aren't so terrible. Now, I know you've seen the accounts done incredibly well just from lucky timing, but that's just random luck. That isn't typical. And again, I've said it in other videos too, when you see people touting obscene returns, I'd be really skeptical of it, especially the people in the comments. While they probably help the algorithm because they get all the comments in there, like, I wouldn't reach out to any of them. So the link's going to allow you to open an account at SoFi. If you deposit $10 or more, they're going to give you a free $25 gift for doing that. On top of that, by using the link, it gives a gift to an account that I opened with my son. He's 13 years old. I try to teach him about investing and saving as well, even though he's super young, because I feel like the earlier start and the longer you do it, the better off you are. So the first week of the year was a pretty rough week. Now, my take on it in general was people probably didn't want to sell at the end of the year, and that's why we had such a big run up. They didn't want to take gains and didn't want to pay the taxes on it. Once we rolled into January, it probably made a lot of people who were doing that much more comfortable to sell some of the stocks that had some gains, driving the price down, because that gives them an additional 12 months to then figure out what they want to do from there. So if they sold first day, Monday, Tuesday, Wednesday this week, took those profits, now they've got a full extra 12 months versus doing it at the end of December where they would have owed the taxes on it. That's my real take. The other thing is the market probably went a little too far, both the stock market and the bond market. They both have gotten a little overexcited about the Fed's comment about maybe reversing course. The markets have put in what they think are going to be 6 rate cuts for next year, while Powell said it may be 3. My guess is it lands somewhere in the middle of that. I'm guessing we might see 4 or 5, and that the markets got a little ahead of themselves and overexcited. And then my guess is the banks saw an opportunity to take what could be free money, in terms of the way that the deal with the Fed is when they went to protect them after the bank closings, where the bonds fell to. Maybe it's worth them borrowing a bit because at 6 rate cuts, if that's over optimistic, they're going to get in really well. And if it does become 6 cuts or more, they can get out with the Fed and sell those things at par. So it's like it's a free trade in some respects for the banks. And I'm guessing that's part of the reverse that we've seen as well. I do think the long trend for stocks. Now, this is not financial advice. I want to be clear about it. You guys need to do your own research for the decisions you make in terms of your financial life. Just listen to me for entertainment purposes. I'm just sharing what I found over the years and what works for me, which really may not work for you. And I mean that genuinely. We're all in different positions. Making financial decisions is really unique to each individual person. And you shouldn't just follow anyone on YouTube. You really need to do your own research, maybe seek a financial advisor and things like that. But I think the general trend is that stocks seem to be going higher. I think that'll continue, but I think we might have, I hope we don't. I mean, I hope it just continues higher, but we might have a big enough pullback to make people nervous to draw in some additional sellers other than the ones that are happy to take the profits now that it's a new year. Now, real quick, before I ramble into other stuff, I know I promised that I'd get into the portfolio early on for those of you who don't care to watch the whole thing and talk about the different stocks. The account was down this week, and in some ways I want to say it's about time. Like I said, my timing's been unbelievably lucky. The type of return that an account's gotten in the past 7 weeks is not realistic for what investing is really like. It was down $278.40. There were only 4 stocks that were actually up this week, and it was a really rough week in the market in general. So what I hope people see is if we invested $10,000, and on a really rough week, losing $278, I think is not terrible. And what we hope is to get about 8 or 10% return over a full year. Now, the amazing thing is we had more than that. I think we were up 11 or 12% in the first 6 weeks. Hi, Winston. But I don't think that's realistic. And it does have ups and downs, and you're going to have weeks where you're down 2% or so. So a week like this will happen. But to be fair, this was a big pullback. So that's what one can expect on a big pullback. Not a crash. Whenever I invest in the stock market, in my head, I try to think that I could lose half of it. Now, I hope that doesn't happen, but that is what I prepare for. So we'll see how next week goes. I'm going to ramble a little bit, and then I'm going to get into each individual stock and tell you how those did as well. So one of the things I wanted to ramble about that I think is funny, those of you who don't know my background, I was a professional trader on the floor of the Chicago Mercantile Exchange where I traded yen futures. And my brother traded at the Board of Options Trades Exchange where he traded stock futures. Now, or stock options. Now, I use covered call spreads. I even sell naked puts to get into trades. And I use other option strategies in my trading account as well. I know I mentioned I have different accounts for different purposes. The one that's like literally in the safe deposit box where I can't even touch it. So I plan to own those stocks for 20 years or pass them on to my son. And then the one that I have for dividends that helps fund, paying bills and help my life if I have a slow month at work or something. And then my trading account that I have a little bit of fun with where I'll sell options and I'll trade those strategies too. When we left, we went on and did different things. The interesting thing is he became a financial planner. I've talked to him about he should do some videos too, and he's not really able to because he runs the risk of jeopardizing his license. I think it's funny, and that goes into my part of you need to do your own research, because what I find interesting about that is that the people on YouTube, most of them can't be financial advisors. So you're listening to people who may have good financial background. Like I pick and choose too, and there are plenty of people who have really good content that I like the information they share. Just part of it goes to be careful and don't listen to everyone. Sun was moving, so I had to change. I hope you don't mind me bouncing around. Like I said, lousy editing skills. So 20 different stocks. I did make one change in the account because it's something that I'd gotten out of in all my other accounts as well, so I didn't feel genuine keeping it here. I didn't get out of the other ones I was thinking of that I talked about last week, but I did sell JEPQ and I bought 2 shares of Tesla. Really my goal in this account is to show that if you buy great companies, overall you should do real well. So I'm just going to rattle through the 20 companies I bought and then we'll go from there. So Archer Daniels Midland, ticker symbol ADM. Amazon, ticker symbol AMZN. Best Buy, ticker symbol BBY. Bristol Myers Squibb, its ticker symbol is BMY. Caterpillar, its ticker symbol is CAT. Enphase, its ticker symbol is ENPH. Foot Locker, ticker symbol FL. Google, I use the ticker symbol GOOGL, but there is also one that is GOOG. You're welcome to pick whichever one you want if you go to buy it. Again, not financial advice. I just picked the one I picked. Meta or Facebook, ticker symbol is META. 3M, ticker symbol MMM. Altria Group, ticker symbol MO. Nextera Energy Partners, ticker symbol NEP. Pfizer, ticker symbol PFE. One that's Virtus Infracap Preferred Stock Fund. It's just a ETF. I'll talk about it when I get to it. Its ticker symbol is PFFA. Qualcomm, ticker symbol QCOM. Restaurant group that includes Burger King and some others. Its ticker symbol is QSR. Starbucks, ticker symbol SBUX. Tesla, which is new to the portfolio, ticker symbol TSLA. ExxonMobil, ticker symbol XOM. And then we have Zillow, ticker symbol Z, which I didn't realize also has another ticker symbol. You can also get ZG, which has the voting rights, and they trade in sync as well. I want to say that the ZG one might be $1 or $2 higher in price. To be perfectly fair, when I bought Zillow, which is a company I really like right now, I didn't know that they had split and have two different stock tickers. It really is cold, so I might try to run through these really quickly and go through how they did for the week. I'll then, if I remember, because I tend to always forget, I keep putting the videos in, but I forget to put a picture of what I had written out and how the portfolio did, so you can see it, in my handwritten, nice scratch way, which has gotten all dirty because the bottom of the tripod and the wind blowing so hard with the cold. Anyway, Archer Daniels Midland, which we have 6 shares of. The total value right now is $425.40. It closed the week around $7.81. Our total profit so far over the 7 weeks, we're down $17.76. And week over week, it was down $7.92. Amazon, which we have 4 shares of, the total account value right now is $581.36. The price it closed at was $145.24. Our total profit is a whopping $1.04. We're down $26.40 over the past week. Best Buy, we have 8 shares for a total account value of $602.64. Closed the week out around $75.83. Our total profit so far, we're up $58.64, and week over week we were down $23.60. And I'll just kind of go over these. I might talk about some of them, but I've talked about them in most of the other weekly updates. Caterpillar, we have 2 shares. It's also freezing. Oh, sorry, I skipped. Bristol Myers Squibb, we have 10 shares. It closed the week at $52.23. Total value, $522.30. Our total profit so far is $29.60. And week over week, it was one of the ones that was up money. It was $9.70. And you'll find that sometimes healthcare or oil and gas and things like that might be up on down weeks. Caterpillar, which we have 2 shares for a total value of $579, closed the week at $288.93. Our total profit so far is $73.78, and week over week it was down $12.34. Enphase, 5 shares. We have a total account value of $576.50. Our total profit so far is $109.60, but week over week it got beat up pretty good. It was down $84.20. Foot Locker, which if you've been following along is one of my favorites because of the CEO, Mary Dillon. We have 22 shares of Foot Locker. The total account value right now is $660. a total profit of $177.46. Week over week, it was down $25.30, which for this week is actually pretty good. Like I said, it was a pretty rough week. Google, we have 4 shares. The total account value is $542.36. Our total profit is a whopping $7.88. And week over week, we were down $16.40. They have earnings coming up soon. They're one of the ones that I mentioned in a video a few days ago. That's like right now one of my favorite companies. I think valuation wise, it's really reasonable. I love YouTube. I love the other companies they own, the search engine, and everything else. Uh, Again, not financial advice. You need to make your own decisions, but Google's like my top for this year in terms of where it's valued and what it is. Meta, we have 2 shares. $704.80 is the current value. Our total profit so far is $35.30. Week over week, we were down $3.12. Full disclosure, Meta is my largest holding. I still like Google better for this year, but like I said, I own these things for what I think is forever. I don't get in and out or change it. And the reason that it's my largest holding is it dropped to like $80 and change a year ago or so. And I bought into it then. And I've just been real lucky for now. I don't know that it just keeps going and going. You know, my trader instinct wants to cover some and rebalance, but I really try to stick with the ones I think are great companies so that if I have a Tesla or something that just runs, that I allow it to run and I don't constantly rebalance going, well, now it's too big a percentage of my portfolio. Next on my list is 3M. I have 5 shares of 3M in this account. Total account value, $542.05. Our total profit so far for the 7 weeks is $67.05. We were down $4.55 week over week. Altria Group, 11 shares, $456.28 is the current value. Our total profit is $9.13. And week over week, it was one of the other ones that was up. It was up $12.54. You know, Altria Group is a good dividend stock. I really don't. I actually covered a lot of dividend stocks like that because I don't see the upside in terms of the growth potential. And I moved some of it into Google, and I moved some into Caterpillar just because I see better, long-term growth potential for them. Now, you guys have to make your own decision. I know some of you love dividends, and I do too. I've just tried to get out of the ones I think might be yield traps, and maybe that's one of them. Next on the list is NextEra Energy Partners. This account has 20 shares. The account value this week closed at $595.90. The total profit so far has been $135, and it was down $12.80 for the week. Again, this is another one that I bought because it had fallen so far. The yield shot up to over 10%, which I think is phenomenal for this company. If the news is correct and what's going on and why it dropped is accurate, I think it's like a total steal. Basically, they lowered their estimates of how much they're going to be able to raise the dividend over time. So when the dividend got to 12, 13, 14, and even got as high as like over 15%, and the news is they're only going to be able to raise the dividend 5 to 8% in the near future. Well, I'm thrilled to get 14% return that they're going to raise that dividend somewhere between 5 and 8% per year. I think that's a great opportunity. I think really good timing. I think we'll be fortunate and see the stock price continue to go up as well so that dividend actually makes more sense to what it should be. Pfizer is next on the list. We have 20 shares of Pfizer in this account. Account value right now closed out the week at $589.20. Total profit is $10.07. It was actually up week over week, $13.40. The one PFFA, which is the Virtus InfraCap stock, preferred stock, I got into this. I really don't like ETFs for the most part. I try to stay away from them. The only reason I've chosen this one is it gets into preferred stock, which I don't have anything in. So I thought it was a good way to get into that sector and be invested in it. They pay a monthly dividend. It's a little below 10%. I really like that. I don't have a ton of it, but I plan to move into those things as I get into my 60s and need that type of monthly return a little bit more than I need it currently. So we have 25 shares in this account. The account value is $513. Total profit so far is $35.50, and week over week we're down $4.75. So again, that one pays close to a 10% dividend. It pays monthly, depending on what you're looking for your portfolios. I like that one. I like it better than the JEPI and some of the others that are touted. So Qualcomm is next on the list, and these are just alphabetical order, and I pretty much put close to $500 each unless the stock price didn't make sense for it. Like Meta, it was either one share or two, and I didn't want to have just one. So Qualcomm, we have 4 shares, $550.44 is the total account value at this point. We're up a total of $32.68, but week over week it was down $28.08. Starbucks, I'm going to start going a little quicker because it really is cold. Oh, I skipped one. See that? See how cold it is? I'm skipping over. QSR, which is Burger King, Tim Hortons, and some others. We have 7 shares. Total account value right now is $538.37. Total profits are $42.42, and we were down $8.54 over the week. I think it's a great company. The CEO used to be the CEO of Domino's, and that's what I really like about that one. Similar to Foot Locker, I find when somebody was successful at one place, they're probably going to continue to have success. It just takes some time to get into the groove with the new company. So Starbucks, we have 5 shares. It's a total account value of $465.05. Our total profit is a loss, and it's our biggest loss, I think, at $52.70. And week over week, it was down $15. I still love Starbucks. I'm hoping this is their year where they finally get out of this range they've been struggling to get out of. They've been getting beat up ever since having really good earnings. I don't know if it's some of the macroeconomical stuff, like what's going on with their labor unions and maybe the ones in China they're worried might get shut down. But I think that they're a great company, and I think they'll grow in time. It'll just take time to get through whatever the issues are. Tesla, which is new to the account, TSLA, we bought 2 shares of it. The account value is $474.80. We're down $20.50 so far. So we'll see how that continues to do as the year progresses. ExxonMobil, we have 4 shares. Account value $410.40. Total profit is a loss on Exxon. We're down $11.92, but week over week we were up $10.48. And then last on the list, again just alphabetical, is Zillow Group, which we have 10 shares of. The account value at this point is $539.70. A total profit of $148.80, and week over week we were down $38.90. Now we started with $10,000. The account is up to $10,902.92, and again week over week we were down $278.40. Chime in. Let me know what companies you think are best. I know there are places I probably could have done better, but I do this because I would rather pick stocks that I think are good companies than invest in these funds that just buy the S&P or things of that nature. I think you'll outperform if you try to pick 10 or 20 stocks that are just what you think are the best. Again, don't forget to subscribe, like. If you made it this far, say hi. Let me know. Be like, I made it. I made it to the part you talked about. Anyway, have a great week. Those of you who've been chatting, I love it, and thanks again.